Guys, good afternoon and thank you for tuning into Money Control. I'm Karunya Rao. With me is Manisha Gupta, and all eyes today on natural gas prices. As opposed to the color of our clothes, gas prices are soaring away and they're at a 1 month high. So, talk to us about the factors that are propelling these prices.
So, to begin with, the trigger clearly last night was Russia's Gazprom news that broke out saying that they have declared force majeure for at least one of the European companies. We have seen that come in from Russia instead of sanctions that have been levied on Russia in any case from the G7 and Europe and US, etc. Russia itself seems to be getting back and closing out a lot of European countries. One, because they are not paying them in Russian ruble, and two, because there is not enough gas being coming out in any case. So the Nord Stream 1 pipeline, in any case, is working with 40% of its capacity. And that is because one of the turbine used in the pipeline was broken. It was sent to Canada for repairs, and now it has come back. Okay. And now perhaps we might see some, supplies increasing from there on. But even before that has happened, Russia has done this, and we have a list of countries where Russia already has stopped sending gas to, and Germany depends totally on Russia for this. And the way the scenario seems to be playing out is that the Nord Stream 1 pipeline, which went into maintenance on 11th of July, reopens on 21st of July. Okay. And in middle of that, they've declared a force majeure. So now by 21st of July, it's going to be a very jittery market, and you should not short it at all. So we're looking at a lot of premium being built up on the fact that, yes, there could be concerns. We already have seen Germany try to get as much gas as possible, try to get 80% of storages filled ahead of winters. And in the meanwhile, you also have seen air conditioning demand coming from US, UK. There's a heat wave there. Yeah. So the gas is in demand right now, and there is no way that you will see the prices go down.
But how's the supply situation overall now? Because when the war broke out, there was a lot of jitteriness, a lot of concern among traders, among consuming countries as well. But now is the picture improving?
Not so much, because when you look at the US inventories, the gas inventories are way below the 5 year average. That is what the industry looks as when they look at stockpiles and inventories. And then we were talking about on how the Freeport facility at Texas for LNG has seen an outage, and that is yet to come back into the markets totally. Having I was saying, the concerns have just about continued, whether it's about the US inventories, where we are looking at way below 5 year average in sense of stockpiles. The Russian problems just about continue. And then another positive really is that whether it's about air conditioning demand or whether it's about the winter demand, the next half of 2022, it does look like that the demand is going to be stronger, supply is going to be in curbs, and prices are going to be on the higher side.
So, what about gas distribution companies? Where do they feature in all of this volatility or the rise that we're witnessing in natural gas prices, the likes of MGL, IGL, etc.? What role do they play typically in such scenarios, and should one look at investing in these kind of stocks?
I think so, yes, because we are looking at gas prices having rebounded very strongly. Last week was nearly 10% of a rebound. In the last 24 hours, we are 6% on the higher side yet again. And yes, we did see a huge amount of profit taking as well, but that was because of the recession concerns, which are not out of the way yet. And much will depend on what the US Fed does. 75 basis points has been factored in. 100 will lead to yet another leg of profit taking. 50 will lead to a huge amount of gains. 75, I'm assuming the markets will just about consolidate. But I think even after 100, if we do see that as a rate hike, it would be a short-lived thing because the market has to come to supply and demand fundamentals sooner or later.
Well, we can't talk about oil when we're talking about gas, and there's been a 5% recovery there. So why is that happening?
102 and 106, 106 is back, and we were Thursday and Friday we were below $100 for both of these varieties. So a very smart rebound here as well. One, the dollar index is off its highs; it's not trading at 109 anymore. You also are looking at the gas issues that seems to be supporting crude, and the very well talked about Joe Biden meeting to Saudi Arabia has not yielded any comment, leave aside an agreement. So the markets believe that the supply issues that we are seeing into this space will just about continue. So crude prices as well. 92 to 110, 115 could be a range for the rest of this quarter now.
That's quite a range. $20 up or down. You have to monitor it very closely. So
but the point being that even as we're talking recession fears, we didn't see prices fall below 90. We didn't see a collapse in crude prices. So I think that tells you that the market is here to stay.
Okay, so 90 then will be an important level to watch out for. Cool. So let's keep that on our watch list along with the natural gas prices. Guys, that's all we have in today's commodities update. Thank you for tuning in.